This is Shorthammer. It is the 20th of November, 2022, and this is Trading Zones. So, we're looking at the RTY. Um, take a peek at the 1746 to the 1797 area. That's the area that we expected to, spend some time in. We got above it. We saw on the 10th of November. And what we see is we got back to this 1863 area. If we look back to earlier in November, late in October, when we pushed up into that area, we saw a rejection, right? Because we see this reversal candle here, and then we begin to go down. So when we touch that area again on the 10th of November, some people, they just jump in. So on the push into this area, they'll automatically be short. Others that are a little bit more conservative, what they'll do is wait to see the reaction. So you see this candle here, right? And then you watch the next candle. It's a strong close above. And so then you'd get long the next candle. Some would wait for the back test first, and some immediately get long. Then they'd use a break back below the low of this previous candle um, as their stop, right? And so if you did that, right, use the break below this previous candle as your stop. So this candle, let's see, is about a 17-point candle. So if you get in here on this the red day, next day is a green day, and that candle is an 18-point candle. So technically you should be out on the high of this candle if you're doing, let's say you're in multiple contracts of whatever you're trading, then you can scale out 70, 80% and leave 20% with your stop on a break back below here. That's a choice. Or stop if it a break I guess what is it? A stop on at break even. That's probably a better place, or 10% above break even. It just depends on how you trade. I say don't let a green trade go red if you can avoid it. Um so yeah. But then when we back test this area that before was supply, it's now become demand. Buyers step in, we push back up. Even though we have this bearish engulfing, we still have buyers step in again and buy this back up. That doesn't change until here. We go back to that area. The next candle does what? Sells through. We back test, then we dip. We back test again, and we see a dip below, right? So this area became supply again, back tested, now it's supply. We need to actually buy back through and hold for this to become demand. So that's an interesting setup on RTY. So if I'm watching RTY, what I would want to see is further extension to the downside because yeah, I'd want to see more extension to the downside, but I'll watch to see if we can get back through this 1863 area. See if we get back above there and if we're bullish. So this is something interesting to watch on RTY going forward. Above the 1863 area, see if we're more bullish, if we get bullish candles above that, and below that area, as we pull, if we pull back to it, be more bearish, and see if we get bearish candles below. If we do drift, get negative drift to the downside, watch out for 1829, then 1814, then we're back to this zone here, this little channel, which is 1797 by 1747. So 1740s by 1790s. If we happen to pop back above, then you want to watch to see if we can grind through these 1908s, 1900, up like lower 1900s, so 1908-ish area. But the immediate area above is 1863, and above that is 1881. That's what to watch out for on the Russ. Also, with banks, and specifically Goldman Sachs has been on a super bullish lean. That should pull back in, right? Because remember what we were mentioning before when it came to financials, there would be a point where the rise in interest rates and the cooling effect that it has on new business would be negated by the interest rates being high enough that the new business that the banks are doing or the interest rates that they're making off of the money that they have is so much higher that it passes that point where now they're getting a positive return or so much of a return on what they're on the servicing of old debt, and also on the money that they have, that them not getting more new businesses, like more new mortgages, more new loans necessarily, is negated by the rise in interest rates and the profit that they're making off of their current business or their current holdings. So I guess we've hit that level because banks are running. So we'll see that. I think that should come in a bit, but just watch for it, right? There's no rush, but definitely watch for it. So remember the Russ, financials, and small cap. So let's keep it moving on over to I'm trying to remember if I do the MES or I do the ES. I know I do one of these. I guess it's the MES. Okay, cool. So looking at the MES, if we go back, right, we've been in a channel between 3,600, which is right about here, the 3,600 level. And so, well, I have 3,586. So 3,586. And the top of that area is 3,817, right? And so, what's the expectation? If we break out of this area, which we did, let's look back, which we did. So here, so we broke above here on at the end of October. We pulled back. We saw a buyer step in. We pushed up, came back down into it, pulled down into it, bought back up. 1 second. Someone's having a few issues here. We don't need to edit that. So you're looking for 1 moment. Close that. Let's take you to here. My no, it's not what you want. Let me pause for 1 second. My son is asking for some assistance with his tablet. 1 moment. Okay. He was having some issues with his tablet, I'm sure. But okay. So if we're looking at the MES, right? Same as the ES. And so we're above this zone. And so if you're looking at this, you're like, oh man, we're going to 4,500. Everyone's getting super excited. But if you're within the channel, if you break outside of the channel, so if we break outside of the 38, basically 3,800, about 3,600 roughly, right? That's roughly the area that we were in for all that time we were chopping around. If you break out of that zone, you should move the length of the channel, which is what? 200 points. So if we break above 3,800, once we hit 4K, which we hit here, that's it. That's all you're looking for. We hit 4K, right? We hit 4K and change, actually, right? So that's, to me, is the movement that should have happened on the true break of the channel with whether it's bullish or bearish. If it had been bearish, we should have seen 3,400, right? If it's bullish, we should see 4K, and we saw 4K. So now, after we hit 4K, now I believe the continued movement has nothing to do with the channel or that coiling that we went through during that period. And right now, it seems as if the market has sort of lost that momentum and it's coiling again, trying to figure out what the next move should be. So the predictions that this is going to go to 4,500, I think, are a little bit premature, because it's not often, right, that we're going through out pre-recessionary times, right? It's a pre-recessionary market where we have a lot of challenges going on, whether it be it in the real estate market, what's going on right now with inflation, right? It's a very challenged market. The Fed has been very hawkish in raising interest rates. So usually the market does not pivot before the Fed pivots, and or there's like a close correlation between the two. So if I'm a person that's more bullish than not, I would wait until the Fed begins to pivot, because what you have to remember is getting the best entry is not what's important in the market, right? What's most important in the market is getting the direction right, getting the thesis right. So if your thesis now is, and remember the rumor for the last month or two has been, oh, the Fed is gonna dial it back, and they're gonna reduce these rate hikes. They're gonna cut the veracity of these rate hikes. Every time that rumor has come out, the market's run has been wrong. The Fed has come out and said the exact opposite thing. So if you're getting bullish now in an expectation that the Fed is going to become dovish, where do you get that information from? Where are you getting that data from? So if you are loading up on longs and you have a short-term time horizon, you may end up underwater. If you have a longer term time horizon, like you're looking at a year or 2 years, and you're in just a small percentage of your account, of your portfolio, you're in, then if this drops, another 10, 15%, you're not going to worry about it, right? Because you're not trying to get out before next year. You're not trying to get out before the next summer. You're not trying to get out before next winter. You're in no rush. You feel that where stocks are currently, right, are of value for you based on your formula, based on your time horizon, based on your thesis. If that's the case, buy. If you're looking to make hey, I need my portfolio to jump this year. I need this market to close above 4,500 this year. I need Amazon and Apple and Tesla and Microsoft and Meta to jump 20%, 30% for me to try to. If you're thinking that, could it happen? Yes. Is it probable? I don't think so. There's nothing that's happened in the market that's shown us that we're now on a nonstop bullish bend into the end of the year. Just be careful. You have a lot of tech companies that are laying off workers. A lot of companies that are sort of scaling back their spending. They're tightening up. They're leaning out some of the infrastructure that they've built up the past few years. They're leaning out some. So that should tell you that they foresee that there may be trouble on the horizon. If that's the case, then it probably would be in most of our best interest to just trade light when it comes to the expectation that we're going to close at 5K on the year. Is it possible? Anything is possible in the market, right? The market can stay irrational longer than we can stay solvent. But you got to be careful and watch your six. So what I'm saying is, from this area, just be careful. If we're going to go to 4,500, then we do need to, from this area, we need some serious buying, and that'll push us right up into this 4077 area. And this is another channel, 4077 by 4155. So we definitely have supply above, right? So we want to see sort of where this goes. And so the last time we were here, we did see a little bit of like a push up into that area, and then a strong retrace, a push back into this 3966 area, and then we just rolled, right? And the 3966, 3967 area is a area that I think is pretty important. Above, there's a possibility to become more bullish. Below, there's a possibility that we can dip. So we want to see how that plays out. That's the area that I'm watching. So the next areas to watch, if you're keeping an eye on this bad fella, if we get back above the 4015, you want to see multiple bullish candles above 4015, and you want to see a squeeze into this 4070 area. And when we get there, you want to see a gap and strong buying that drives us through this area, or at least drives us to the top, and look for a pullback, and for there to be like some sort of a springboard and a drive higher. That's what you want to see. You want to see insane buying, right? What you don't want to see is us sort of weaken and get below this 3966 and then lose this 3915 area, which is a little top from here. Look here, back on the 30th of October, 20th of October, 20th of October, and look at this pop here on the 1st of November. And then here, this dip on the 17th, and then you see that dip and this sort of pop out of that area. You want us to not go down below the 3915 area. You want to stay above that, and you want to see buyers squeezing us up into the 4K and into the 4077 area is what you'd want to see. So those are the two leans that we have. If we do retrace, then there is a possibility to go all the way back down to the 3,800 level and then maybe even deeper, right? That there is possibility we could retrace inside that channel and begin to see negative drift. Is this the low of the year? I have no idea. I've seen nothing that tells me that the selling is over, that the recession is off, that the government has figured it out, or that corporations have figured out how to operate in an environment where the government isn't giving them all these signals that they're going to cut back on these interest rate hikes, right? So I think a lot of the things that are going on, as far as from how companies are viewing it, are very Fed dependent and very interest rate dependent and very inflation dependent, right? And so, yes, we're headed into the holiday season when people usually do spend quite a bit of money, but we have to see how that plays out in this high inflationary environment. And the way that I would expect it to play out, and I don't mean to be too long-winded on this, is that people that are that are not living check to check, right? People that are I would say that are doing very, very well. The people that are doing well, they're going to still spend money, and they're not going to have a big deal with inflation. They're not going to probably change anything. Those that are quote unquote near the middle class, whether the upper middle class, they may feel the squeeze, and that's who we're going to watch to see how they treat this holiday season, which should give us a huge sign as to what that first quarter is going to look like. It's going to be interesting. So let's keep it moving. But that's sort of what I'm watching on the MES. I think we could really go either direction, and we could grind a little bit more. But if you look at this movement from the 10th to now, we've barely moved at all, really. We spent most of that time in almost like a 70-point range, 60-70-point range. We really haven't moved that much. So yeah, we'll see sort of what next week looks like, but it really does look like once we see a break either below the 39.15s or above the 40.17s, and there's volume and there's strength in that move beyond those areas, then we could see an extension of maybe 70 points or so in either direction. Is what I'll be looking for. All righty. Let's move on to the MNQ. I'm gonna zip through these. So looking at the MNQ, it's right at the zone, right? And this is the 11,709 or 11,700, we could say, by the 12,034. And so it pushed through the top and rejected, retraced, didn't find purchase here to buy back up, and we sold back through the bottom here. One moment. And so that we're struggling here, there is a potential we could see a separation and a drop to the 11,514, then the 11,380s. In my opinion, right, the Qs just they did push up. Nice push here. Nice buy. Love this. It's beautiful. And the pullbacks are kind of holding this little top area where we saw like a rejection here. So we're sort of seeing action and buying out of that same area. But watching this 11,700 by 12,030 area, if I was bullish, right, because I'm neither bullish or bearish, I just wait for the movements. I'd want this above the 12,030s, and I want the buyers to be trying to gain this level and run us up to the 12,304s. But that's not what's happening yet. So we'll see how this shakes out. But for me, I'm just waiting for the sign that we're going to sell, right? I'm not judging like, oh, this is definitely this pattern. Like this pattern here, this beautiful M pattern didn't play out. We dipped, but the buying stepped in and kept us from extending down and selling on this pattern, right? And this pattern did pay pretty well on pullbacks into that area, but there's a point where it just stopped, right? And then we saw this pullback like we're gonna sell. And look at this strong buy candle, right? The next candle, then this is when you start to stop out these shorts that were playing off these tops. Squeeze up into this, pull back, give them a little bit more. So that's beautiful. So now we want to see what does the market do with that, right? Does it recruit a lot of buyers and then flip it, the script on the buyers, and then use them to fuel a down move. So just be careful. Watch 11.514 to the downside, 11.388, 11.262, 11.260s. If we go to the upside, we really need to clear the 12.030s. Once we clear that area, we should be keeping an eye out for extensions into the 12.309 area, right? So we need to be bullish above 12.030 and then a squeeze into the 12.300 area is what we should be expecting on M and NQ. At least that's what I'm watching for. So either direction we can go, right? And that's how I trade. I don't say, oh, we're definitely going up or we're definitely going down. I wait for the setup, and whatever the probability is strongest that that thing happens, that's what I do. Okay, on over to Amazon. Nice dip on Amazon. Push back into the line here. So for Amazon, we want to see bullish above the $95 mark. We hit the 102. So for the next bullish move, I would, if it were me, right, I wouldn't play this. I would personally want us to buy back. I would not be looking for longs unless we got over the 102 and we saw bullish action to give us the potential to hit the 106.96 area. And that's what I'll be watching for with probably like a $2 stop, right? Now that we're back down here, for me, last time we were in this area, the buyers gave a little bit of resistance, right, to the selling. And then we saw this big buy candle here, and we sort of went back up. This could have been a back test for more people to get short, right? Or people to get out of a short scalp. So for me, I want this $85 area to clear before I look to for any type of a short position, just because the previous candle structure shows that at this point, buyers had a different plan than the sellers. And up here at the 102 area, sellers had a different plan than the buyers, right? And so down here around the 86-ish area, you can see where the buyers are telling you that, hey, we feel there's more value to the upside. They drove it back up. And when we got to the 102 area, the sellers were saying, yeah, there may have been more value, but we don't feel there's much value above this level. You want to wait for these sides to sort of balance out and for the sellers to gain greater acceptance to the downside here, or for the buyers to gain greater to get greater acceptance to the upside here. So that's what's interesting, and that's what you should keep an eye on. Also on this flare up here, if you look back, this is from 103.96 on this sell candle from like right around earnings on the 27th of October. The pullback was roughly into that area, like the 104-ish area. And so this pullback couldn't quite get through there. So this could just be a slight relief bounce that leads to more selling on Amazon. We are headed into a season where Amazon usually does do well with the holidays. So just be careful with your positioning. And I think one of the things that people expected was a red wave as far as the elections, and it turned out to be more of a purple type of mixture of Democrats getting some wins and Republicans getting some wins. So overall, it's sort of like a almost like a gridlocked congressional situation. So we just want to see how all that plays out over the next few years, and actually over I think watching what happens this upcoming week, right now that the elections are behind us, let's kind of see what the market begins to tell us as we enter into the holiday season as to the sentiment of the market. Is the sentiment more bullish? Is the sentiment more bearish? I think we'll begin to get a thesis. The Fed is showing us a lot of hawkish language, hawkish conversation, right? So we want to see if that bleeds back into the market and we begin to sell, or if the rumor that's been spreading that the Fed is going to become more dovish headed into next year, if that also takes hold. And even though there's still hawkish language, if the people that are more bullish are using those dips as opportunities to buy more of things that they love. So we'll see. That's Amazon. Let's move on over to the next thing. Netflix. So looking at Netflix on the 4-hour, it did make a higher high wave. Thank you, buddy. Very kind of you. May I give you this? Said no. I was rejected by the baby. He said, not at all, my friend. That toy is not interesting to me. I know that's right. Okay. So as we're watching, Netflix here, and this is a since earnings, right? And remember what we said about Netflix, guys. We were so spot on with this. We said that we believe that Netflix had a great opportunity to do well going forward. Why? Because they were changing their business model from, hey, look at how many new subs we have, which I think is a ridiculous way to do business. Like imagine if you ran a food truck and your food truck didn't get any benefit, right, from your current customer base that were your loyal customers that returned, every lunchtime or every right, but right after work on Fridays, you had these booms that you receive, like you have investors, and your investors didn't see any value in your current recurring customer base. Your investors only saw value in any new customers that came to your food truck. That would be insane as a business model. In fact, if you had investors that said, hey, we'll only consider this business a success by all the new customers you continue to gain, not by you being able to monetize your current customer base, most people wouldn't take that deal. It just makes no sense. It's like you're on a constant treadmill, running and racing and ripping, trying to find new customers to be able to satisfy this criteria that you continue to get new customers to prove that you're growing. Nonsense. What you would rather is for your investors to say you found a way with your loyal customers to be able to make more from those loyal customers and find better ways to monetize your current customer base. So any extra customers that you gain, that you're growing, that's the cherry on top of the pie of you being able to really, really, really monetize your current customer base. And so that's what Netflix kind of did when they said, okay, cool. What are we going to do? We're going to introduce advertising, right? And so by introducing advertising, what's the main way, right? Two of the biggest sports in the United States, the NFL and the NBA, what's the biggest way that they pay their players, right? From the TV deals. That's how they make the money. So selling advertising is basically how the uh, television networks make their money, is by advertisers. So by Netflix flipping to that model, to me, meant that going forward, they could they're going to make billions and billions and billions. It's just a brilliant pivot, especially for a company that likes to create content. So regardless of what happens over the next few months, I'm bullish on Netflix unless they absolutely fumble the ball when it comes to this new advertising model that they're trying to roll out. Unless they absolutely fumble the ball, I am bullish on Netflix as a company because they changed their business model to something that's more logical. And that seems that to me has tremendous upside. They have a lot of loyal customers. Better monetize them. That's what you focus on. So looking at where Netflix is here, right? Nice little pullback here. Could we pull back to 282? That's possible. I wouldn't be getting long of this right now. I kind of want to see what happens if we get to 252, and if we're looking at this right as in a matter of waves, we have a low, higher high, right? Push to here, pull back, made a higher high. Then we pull back, made a lower low below this wave, then another lower low wave. Then we push back here and made a higher high wave to cancel out that being lower than this, being lower than these lows, I should say, pardon me. And so now we have an opportunity for this pullback to be a lower high wave for us to go lower. Go higher, but we'll see how that works out with the current market environment. Um, so for me, I'm not doing anything with Netflix currently, unless I see some intraday setups, maybe a pullback in the 292 and look for a rejection. But I don't feel that right now, but with this current chart setup on the 4 hour, I'll just watch these levels and be careful and maybe take a few quick scalps, just based on if I see an intraday setup that I like. Because on this higher time frame 4 hour setup, I don't really see a setup that I like, that I would be taking, something that I would swing, right? So if I'm watching this, above we have 292, below 282, above 292, then we could target 306 potentially. below this 292, technically there's a great chance that we continue down to the 282 unless something else happens, right? Like some other news enters that changes that perspective. The last pullback to this area, we could see we had a bounce here on the 24th of October, but the previous one we cut straight through like butter, and then there was a hitch here around the 274 to 268 area right near the pop purple, pop blue. So that's the area that if I was looking to long Netflix, I would not be longing Netflix unless it sort of broke back up and broke this high, or if Netflix pulled back down here around the 264 area, 264, 270-ish, 273-ish areas what I'd be looking for on Netflix personally. Keep it moving, pick up the pace. NVIDIA up into this zone that before was a channel, and so we're rejecting below that channel. So for me to be bullish on this, I need this to be above the 181 level, and I'd use this area as a stop. If we pull back into it and look weak, then I'll be out. Right now, this is a great short off this pop purple. Nice dip back down. I personally do feel that the bottom is not in the market, right? So I don't think any of these tickers are going to be going on these massive runs. Everyone feels a little bit differently about it. So it's up to each of us to stick to, what we feel is right. It's still slightly uptrending. If you wanted to use the lower lower low waves here, you could do that. You could say here, I'll just drop these on the dips, on the lowest dips, right? Drawing it from where we are to these dips is what some people may do. That's potential to do that. That's fine. But if I'm looking at this, boom, so you drop it here on the wicks. I'll adjust this more, but you get the idea, right? So if we drop down here and we break the trend back test, maybe it's a good thing to go short on because we were uptrending and we lost that trend. So we'll see how this plays out on NVIDIA. I'll tighten this up later on. But watching NVIDIA, we're below this zone, below this line at 158. The next line below was 138. But I'll look to see if we see a bump at the 146 by 148-ish area. Where we see a bump in there. There was a hitch here, roughly the same area. 147-ish by 144-ish. So basically the 140-ish area is the area to watch when we get to the 147s, the 146s, the 145s, to see if buyers have anything to say about NVIDIA. And what's funny is that'll probably be the same area where this little janky uptrend line is running, and see if buyers step in that area and we get a higher high and a push through this little channel here on NVIDIA. Let's keep it moving. Microsoft, not as strong as those other two, as Netflix or as NVIDIA. So if I'm watching this, we paused here in the 250-ish area, 249-ish area, pull back, and you see it's going sideways here. If we get negative drift here, 241, I'd watch a crack of 238 whole. If we crack 238 whole with a little bit of force, I'll keep an eye out for the 235. Below that, 231, 229, then 221. If we get bullish movement above the 249 and we begin to squeeze with some volume, then we see the 253-ish area where the pop purple is. Then I'd really be watching the 251. Then the 257 is possible on Microsoft. On over to Tesla. Tesla's been really weak. I believe that news came out about more recalls for cars. Elon's in a tough position. Before, people used to love that whenever something great happened with SpaceX, that he'd get a bump in Tesla. But now you've thrown Twitter into the ring with all those things. So now you have to sort of see the political blowback and the just all the challenges with Twitter and how people feel about Twitter and the decisions he's making with Twitter. Tesla had just without anything else impacting it, Tesla had enough headwinds to deal with as far as China and factories and just all the challenges that with sales. So with those as headwinds, and now to throw Twitter in there, and now his attention is split with that. I just think that there are a lot of challenges for Elon right now. And we have to see how that plays out with the investors in Tesla if they feel that his new acquisition of Twitter may be a greater distraction and another headwind that can really damage his ability to have, just build goodwill when it comes to Tesla. So I think it's all interesting. And personally, I think Tesla has room down to 154. Hey, big guy, hop up here. And I think Tesla has room down to 154. Before I look to long Tesla, I needed to be bullish above 198, and I look for a setup there as far as to long with this current setup. But I do think that we do have room down to 154.28 and maybe lower. We'll see how that shakes out with Tesla. Let's pop Meta up here. And Meta, nice bounce here. Pull back from here. Doesn't look bad. That sharp uptrend looks like it's kind of broken, but that's not really, doesn't really mean that we can't continue to go. If I'm watching Meta here, I'm not interested in longing this. I think we may go lower. Yeah. Down here around the 70s, maybe see a little line there that we drew in. So we'll see on Meta. I'm not really bullish on Meta. If we get above the 118s, then the 121 is there. Then above that, the 124 area. But I'm not really bullish on Meta right now. I think that there are a lot of challenges at Facebook, and the pivot to the metaverse and a lot of the things that I was discussing about that pivot in past videos, it seems as if just what people are thinking about it right now is that Zuckerberg is not doing a great job of building out the metaverse and the infrastructure and pivoting the company into that area and more away from ads and advertising as a main driver. So we just have to see if that changes. And if that changes, then maybe they'll have a Netflix like future outlook of growth, right, on Meta. So we'll see how that shakes out. And another thing I wanted to bring in is NOC. I think it's really at an interesting spot. If you see, look at the 4-hour here. Just a janky downtrend line. I want to see what happens when we touch this downtrend line, and not just a downtrend line, right? So when I play, I'll look at things like this. I want to see what's the volume on calls and what's the volume on puts, and what type are there any option sweeps? Like, what are people looking at when we get there? And do we see an increase in buying or an increase in people looking for short positions when we get here? This will be interesting. If we pop above, do we then see an increase in the squeeze? This is on a 4-hour, and a squeeze to go higher. So this is interesting to watch. Pull back here, went lower. Pull back on 9th of November, went lower. Pull back here, 9-10 days later, will we have the same reaction? And so on a push up anywhere around the 520s, mid 520s or higher here, anywhere near this line, I'll probably look for a creative short position to put on here with some spreads or things of that nature, and just see how it plays out. Probably put out a few weeks and see how it plays out. And if we're bullish above, then I'll close that position and look for the exact opposite position on NOC. Right. And remember, Northrop Grumman is a defense contractor. That's something to keep in mind. But that's sort of something I'm keeping an eye on. And I think we'll stop there. We didn't even look at Apple, right? I do have to boogie. My son is definitely asking for some attention. So nice drive on Apple. Man, we may go back down. So we're above the 149 area. If I'm bullish, I want us to clear the 152 area. So all the 152s. And then I want to look to see if we can top out again and get the 155, 70s, 156s. That's what I'll target. If we don't get above the 152s, if we lose the 150 whole dollar, I'll keep an eye out for a dip into the 148.20s, 148.50s on Apple. And then below that, we have the 147.40s, or just 147s, and the 144s. That's what I keep an eye on. If we really do go on Apple, maybe we make it up to the 158s, right? And just level to level above the 152s, right? Clear the 152s altogether, and we're bullish. We're really strong here. Look to see if we can see more bullish pressure in the squeeze into the 155s, 156s. If we can get more bullish action above that, then maybe the 158s, but above the 152, so into the 153s with strength, then I may look for long into the 155s, but above the 155s into the 156s, I would be scaling out. I wouldn't be in. But just be careful on any trades that you're taking right now. Market's just in a really strange place. Yeah, hedge yourself, be careful. Don't listen to what anyone is telling you. That's if they're super bullish or they're super bearish, don't believe them, right? Because there's no way in this current market that anyone can be so certain that we're either bullish or that we're bearish. Thank you so much for taking the time to watch this video. And if you'd like to receive more content from us, please subscribe to our YouTube channel, Power of Pivots, where you can look forward to getting not just videos from me, but videos from Elisa as she shows you how she utilizes that Power of Pivot script to find great intraday entries, great pre-market entries, and great post-market entries, and also swing play setups. Thank you so much for your time. And remember, you're only one trade away. Thank you.